I bid you all good morning, good evening, and good night, wherever you watch this transmission. It is I, Mike Martins, bringing you a very important video. A lot of people have been following this channel for almost 9.5 years now. This summer will be 10 years. We've been talking about housing affordability levels on this channel across the Commonwealth, whether you're in Canada, Western United States, the United Kingdom, Australia and New Zealand. We've been following the same patterns in every English-speaking country on affordability levels and debt-to-income ratios per household in each country, and seeing how the patterns vary. And it's basically selling out to the highest bidders, selling out to rich investors is what got us into this predicament we're in right now. Lack government, the lack of government infrastructure put into place to protect the locals from being bought out didn't work very well. It worked against them and it worked against us. So now we're in a predicament and a situation where affordability levels are nowhere near where the average person could go. Now things are changing. And I've made several videos last week and the week before, kind of following up what's happening with the sickness that's been floating around. Now, this is kind of important because this is housing is affecting everybody, and it's a big deal. It's a big deal. So let's take a look at where things are headed and where things are going to go. I took some show notes here on the side and did a bit of math for you guys, okay? So we are looking at the current unemployment levels right now. So today we're going to be focused on Canada, okay? This is all coming to a city near you, and it's basically the housing is where we're getting hit the hardest because the lack of affordability is just beyond anything anyone could ever fathom. So, okay, guys, let's start. So let's go over my notes here. We started with unemployment, where it's at, and the mass unemployment now with the sickness. Then we look at what is left with disposable income, what's left with savings, or i.e. HELOCs, what's on HELOCs, what's left on HELOCs, people using their homes as ATM machines. Then we're looking at the average total debt service ratio. So I took the adult total debt service ratio from the average Canadian on what they borrowed against and how much they could leverage. Or leverage, yes. And then looking at factoring in the government bonuses or the relief that government's been sending in Canada, and looking at our contracting economy at every quarter so far. And it from the January to March contraction is pretty big, especially because the amount of job losses and people signing up for unemployment. So I have it broken down here by number. From Vancouver, Alberta, Toronto, and the Greater Toronto Area, and how much of a pop or how much deflation needs to happen. Now, I did a video not long ago here on the channel. Document cam, please. So here it is, guys. I did a video. Oops, wrong window. I'm sorry. Let's get to the window I want to get to. On trends in the housing market, if you want to join us, we're here every Wednesday night for the last 203 episodes, 3-hour episodes, 200 of them, discussing trends in the housing market, the perfect storm, people call in, just people calling in. Look, we got Formafist here calling in on this show from about a year ago. We have Kaboom in Australia, housing market, destruction in New Zealand, all kinds of episodes here that we've been covering, and I've been covering and watching the total debt service ratios, the unaffordability levels, people mass exiting major cities and going to smaller towns. I'm one of those statistics. I left a big city and moved to a smaller town because I was just fed up of the rudeness in the big city. I was fed up of just not the same country I grew up in when I was a child, right? So here it is. This is a Better Dwelling article from this morning. Employment in Canada's largest city is worse than it looks. So Canada's largest real estate market should prepare for a very different economy over the next few years, says Stats Can. Data shows unemployment in Toronto, Vancouver, and Montreal made a big climb in March, as bad as the loss is. It's muted by a rapid decline. Not mutated, muted by a rapid decline in the participation rate. This means a loss of employment and productivity that comes with it. So loss of productivity, a lot of it is in the service sector though. Canada did want to go green, so we lost a lot of our industry jobs, or we sold out our industry jobs to other countries. It's worse than the headline suggests. That would also mean that the recovery will be slower than most anticipate. So unemployment and participation rates are down. Toronto hasn't seen a participation rate this low in decades, so the Greater Toronto unemployment is rising, but falling participation is obscuring the damage. The unemployment rate was reported 7.8% for March, up 11.42% from the year before. This is the highest level since August 2016. So that's not all that long ago. It's lower than Montreal, Vancouver, obviously. Not a big issue, right? Well, here's the CMA unemployment rate. And look at it shoot up right there. With the contracting economy, we're in deep trouble. So there it is there when unemployment spiked up. Now, employment participation rate is very important. And there it is right there. There's your elephant trunk. It's in the water. So usually when you see it pass a major line here, I like to say that it's in the water. The trunk is in the water and it's moved. It's wow. So we're going back to 2001 and you see this downward trend going down. Vancouver's notoriously low unemployment rate is no more. So here it is, guys. Vancouver's unemployment rate also shot higher. The region's rate came in at 7.6% in March, up 68.89% from a year before. So there it is. There's the unemployment rate. And here is the participation rate right here. Holy crap. We're back in this territory here from 2015. Holy smokes. And Montreal's unemployment rate, kapow, right in the kisser. And Montreal's employment participation, kapow in the kisser. There it is. At 63.5%. The last time it was that. So around January 2001. The rise in unemployment rate is challenging before lost participation is factored in. Now let's move then to once seen as a safer than gold, Canadian real estate braces for the Great Reckoning. So here it is, guys. We've been talking about this, and you know what's been masking this for the long. Oh, let me zoom this in so you guys can see it better. What's been masking this for the longest time, pretty much since day one, is the fact of foreign investing has been playing a big part in Canadian real estate, with $200 billion laundered via Canadian real estate from 2011 to 2015, and that's all we got. That's all that's been investigated, right? Till now. So those are the only numbers, unfortunately, I could work with. So unfortunately, that has become a huge problem, but now it's the Great Reckoning, right? And then it's basically the Canadian proper that got into the FOMO or listened to the real estate agents when they told them, if you don't buy now, you'll never own anything. Well, Canadian housing once seemed like an infallible that the head of the world's biggest asset manager in 2015 described Vancouver's condos as a better store of wealth than gold. Man, were they ever wrong. And those real estate agents, if you don't buy now, you're never going to own. While lockdowns, job losses, uncertainty are rolling property markets from the UK to Australia, Hong Kong, Canada situation is more precarious than most. As its oil sector shriveled in recent years, Canada's economy became even more driven by real estate, an industry now in the state of paralysis. Near one of the three workers have applied. 1 in 3 workers have applied for income support. So there it is, guys, right there. People saw it as a safer haven than gold. I feel sorry for whoever bought into that load of crap. Sorry. But here it is. Covey stinks Toronto housing as sales sink 69% in April. So here it is, guys. This is the big deal. Canada's largest housing market went into deep freeze. When our housing market is almost the size as Germany's, when Canadian housing market is almost the size as Germany's economy, we got ourselves a major issue. We're too dependent on construction. We're too dependent on foreign money. We've been heavily binged on foreign money to come in and buy us out. Canada's largest housing market went into deep freeze in the first half this month as COVID decimated homebuyer demand. The home sales across the Greater Toronto Area fell 69% year over year during the first 17 days of April, as just 1,654 homes traded hands, according to the data released Wednesday morning by the Toronto Regional Real Estate Board. New listings nearly matched the decline, sales slumping 63.7% from the same time last year. So there you go. Sales are going down, and here it is. Home buyers and sellers have concerns about the economy and indeed their own employment situation on top of this. Many home buyers and sellers are avoiding any type of in-person interaction. The pandemic is arresting momentum that has propelled Toronto's average home price above $900,000 in recent months, as routinely posted double-digit gains while inventory failed to keep up with pace and demand. So all major home categories faced declines in activity in the first half of this month, with condo market hit the hardest. Sales sank 72% year over year. So there it is, guys. Now let's move on. I'm going to give you my numbers at the end of this, guys, real quick. I'm going to give you my numbers of where the numbers should be going as this contracts, as the economy starts to contract, and when the government bonuses start to fade, and when the total debt service ratios now are beyond serviceable, and when disposable income dries up, and as unemployment surges, how many people would have a job when their jobs reopen? So here it is. Is Toronto's real estate market in a bubble poised to burst? Yes, it is. And I'm going to give you the numbers here. Will the Canadian housing market crash in 2020? It has to. And landlords among the most vulnerable homeowners during COVID pandemic. So a lot of landlords, and we're going to get into this, Airbnb ups its debt by $1 billion amid the COVID travel crunch. So Airbnb is getting a kick in the pants, and there's secured commitments of $1 billion for a syndicated term loan in institutional investors, it said. So it's a emergency cash injected, comes as COVID travel freeze continues to hammer vacation rentals with holiday makers locked down at home. So what's happened, Airbnb? A lot of people became entrepreneurs in the housing market by buying up properties and just Airbnb-ing them out. And that created a huge problem, a huge issue for locals that are in the workforce, or local people that are just trying to get ahead an average home, shelter, roof over their head. And Ontario bans Airbnb as short-term vacation rentals during pandemic. So that's from a few days ago. So there it is. People breaking the emergency law, individuals could face fines up to $100 to $10 million for corporations. So there it is, guys. Now let's go over the numbers, guys. I'm so excited. I wanted to bring this up. Let's go over these numbers, guys, and here it is, guys. All right, now this is what we're averaging it out. Guys, please share this video. Get it out there, guys. I've been talking about this for so many years, and if you could share this and let people know, so this is what's happening in Canada. I'm going to do each country individually, and United States will be a little bit tougher because there's different regions of affordability levels where affordability is within wages. And the average house in some states in the U.S., an average 4-bedroom, 2-bath, is still in and around $109,000 to $203,000. So it's really tough to do an estimate on the states. But here we go, guys. Here's Canada. Ready? So Vancouver condo sector needs to see, a correction of 61%. It will pop. It will deflate 61%. I know. I had to relook at that. So hold on. But before we go on, I want to tell you that this does not include empty homes or empty vacant homes owned by investors, which is a great amount of those homes, because I have no data. A lot of these people don't work in Canada. They don't live in Canada. And you know what's scary? 10% of these people have never been in Canada that own these empty units. Okay. Vancouver housing correction will see a 52% in Vancouver. Then the lower mainland, which is like Burnaby all the way up to Hope, will see a condos are limited in those areas, but you will see a 41% correction. And for housing, you will see a 39% correction in the lower mainland. Alberta, in the city of Edmonton, in the condo sector, you'll see a 21% decline or correction. Edmonton housing, you'll see 31%. Calgary condo sector, you'll see 35%. Calgary housing sector, 39%. And then Toronto condo sector, 42%. Toronto housing sector, 53%. Greater Toronto condo sector, 58%. And Greater Toronto housing, 51%. And then we have Montreal housing correction, 11%. And condo correction, 21%. And then we have Newfoundland, Labrador, Prince Edward Island, condo sector, 7% correction, and housing sector, 31%. Whoa. Because a lot of people left Ontario and moved out east to Newfoundland and New Brunswick and other Halifax. So there's the corrections right there, guys. That's what I've been forecasting. Again, we're looking at the contraction of unemployment and people applying for unemployment, disposable income drying up, average total debt service ratios, and what's left in what is left in availability and credit levels for people to borrow or borrow against properties, and government bonuses, and our contracting economy from the last quarter. That's what I have right now, guys. Let me know what you guys think in the comments below. Guys, please don't forget to subscribe to the channel, share this video, join us every Wednesday for trends in the housing market. Pay $6,000-7,000 and we get call-ins. Get it there. Housing
resistant, fire resistant materials and stuff, so you don't have to really work. They're pretty nice though for a 20 by 20 shit box.
Oops, there was swearing in there. I'm sorry. But we're looking at portable homes here. We're looking at a lot of stuff. I got some good news. We got good callers calling in on the ground not me and you. From all over the Commonwealth. Stream got completely connected.
So I don't know where they're losing the money.
Well, they're losing. Everybody's losing money. So don't forget to join us, guys, for trends in the housing market every Wednesday. Set your reminders here on the channel if you can, and be part of the channel. I would really appreciate that. To ship it, get it there, spend your. And here it is, guys. Trends in the housing market. Set your reminder for next Wednesday. Mike in the Night every Saturday. The hit show. Getting calls in from all over the Commonwealth. Let me know what you guys think in the comments below. Tell me. Comment below if you want to see a specific video. Please let me know. Comment below. I would like to know what you guys want to see or talk about. Especially, I've been covering this housing agenda for many, many years. Thanks for watching, guys. Big hug, and share this video.